What is going on, ladies and gentlemen? Welcome back to another episode of the Jack Mallers Show. I am your host, Jack, and this is Mailbag Monday, episode number 69. Get your head out of the gutter. We're here to talk about Bitcoin and macro. Boy, it's a good day to be alive, and it's better with Bitcoin in it. For those that don't know, Mailbag Mondays, we go live every Monday, 6 p.m. Eastern, 5 p.m. Central, 3 p.m. Pacific. Shout out to the chat. There's someone in Alaska. I guess it's 2 o'clock in Alaska. Said, don't forget about Alaska. I'm not going to forget about anybody. I'm not here to forget about anybody. All right. So without further ado, let's get this show on the road. It is so good to see you all as I talk to you at a Bitcoin price of $108,740. That puts our market capitalization, our being Bitcoins, at 2.16 trillion US dollars. Bitcoin's all-time high remains at $111,980. We are just under 3% from Bitcoin's all-time high, which was established on May 22nd, 2025. For those of you that keep track of time in Bitcoin block time, I am talking to you at 900,562. That is Bitcoin block 900,001,562. Okay, the title of my rant today is Bitcoin and gold, the new safe haven assets. For those of you that are new here, I rant and I kick and I scream at my computer for about half hour. And then the other half hour, I do Q&A. So if you are live with us and you are listening now in real time, you are more than welcome to add some questions to the chat. My team will collect those questions. They document them on a piece of paper. And at the end of the show, I go through all of them, or as much as I possibly can, before I have to go. So with that, let's get this show on the road. So Bitcoin and gold, the new safe haven assets. I just want to start my rant by saying this. On this show, I talk often about how this is not a political show. Unfortunately, we have to talk about politics. The current state of fiat currency has everything to do with money. And politics and central banking and the monopolization of printing currency and controlling currency, capital controls, tariffs, sanctions. And so we talk about the Trump administration, the Biden administration, Russia, China, India, the EU, the ECB. Unfortunately, we have to. I do try my best genuinely to stray away from siding with politics. I have told you guys I take a lot of shit for it. I've never voted. So anyways, all this to say, I'm not a politics guy. I try and stay out of the politics stuff. Even furthermore with war, okay? Where do I stand on war and violence? I don't like any of it. I am just anti-violence, period. I know that there's all sorts of sides to take, and there's all sorts of ups, downs, left, rights, this, that. Did you hear this? But this person said that. And that's not what this show's about. This show is really a safe space for Bitcoiners to come and connect with me and hear what I have to say. And, you know, we do Q&A. We have a lot of fun. There's jokes, there's yos, there's empty closets. And this show's not about, you know, dissecting and picking sides in war. So I just want to say before I get into all this, I'm against anyone dying. I'm against any form of violence. I really do believe that Bitcoin can demonetize war and we can have a peaceful revolution. You know, war is in part, or in large part really, majority funded by the ability to print money. Before fiat, you had to raise war bonds. And so your population had to go into their savings and give you their savings in the form of gold to fund war. And so a war was only funded if the majority of the population felt it was necessary. When we introduced fiat, all of a sudden, governments can strip away the liquid wealth from their population without having to ask for it via inflation, via printing money. So all that to say, I'm against war. I think it's terrible that bombs are being shot and dropped, no matter who and where they are. It's just, as a human, I hate to see it. So, with all that, I know you guys don't want to hear me sob about war, but I needed to give my preface. Let's get into it. So, the first screenshot I have for you guys to really try and break down the idea that the world has things going on. There is forms of crisis. There is forms of negotiation and trade war. There's hot war, real war, bombs, and then there's trade war, negotiations, deficit and surplus war. Let's start with this article from Bloomberg. Let me pull this up so you guys can see. It is, in fact, from Bloomberg. China found world's pain point on trade and will use it again. I found this article fascinating because they're saying the quiet part out loud again. And for listeners of the Jack Mallers Show, if you've been here every single Monday, none of this will surprise you, but it will leave your jaw on the floor because everything we've been saying on this show is now being written by Bloomberg and broadcasted to the world. What do I mean by that? So, for those that have been living under a rock, Trump has gone out of his way to talk to President Xi of China and try and come to some form of agreement, some truce, so to speak. Everyone acknowledges that we're going through a divorce with China. U.S. is trying to bring back manufacturing, reduce its deficits. China is also has its own plans. We are headed for a divorce, but in the meantime, we have to find a way to live together. This is directly from the article. I just wanted to read it to you guys. For months, Donald Trump has imposed unprecedented levels of tariffs and trade restrictions on China, part of a strategy to force Xi Jinping into talks that the U.S. president hopes will help cut the trade deficit and boost American manufacturing. So on this show, we knew that. We knew Trump went super maximalist on his tariff position, assuming he had leverage, assuming he had the upper hand. What we had said on this show is he doesn't. It took 5 trading days for the bond market, the Treasuries market, to malfunction, hit extreme volatility to where they had to say, stop, stop, stop. Everything's falling apart. You saw dollar down, stocks down, bonds down. And that's when the Trump administration, in my opinion, realized, we don't have the financial leverage that we thought we did. I continue to read. The U.S. tariffs soaring to 145% and the Trump administration boasting that it has the upper hand over China, Beijing has turned the tables, essentially halting exports of the one thing the modern world cannot live without, rare earth magnets. Okay, my commentary on this. We've talked about rare earths on this show before. We haven't done a deep dive. I will if you guys want. I'll read the comments after. The point is this, but what I have said about it is, we need China for war. Okay, I'll just put it like that. A large part of the backing of the U.S. dollar is the U.S. military, is violence. For those of you that don't know, shortly after we divorced from the gold standard, we had the petrodollar. Petro is short for petroleum. It was basically the oil-backed dollar. The way that relationship worked is we established a relationship with Saudi Arabia, a partnership, and said, you price your oil. You're the marginal producer of petroleum. You price that in U.S. dollars, and we got your back with weapons. So no one's going to kill you, and you can go kill any motherfucker you want. So we armed a bully in return for backing the U.S. dollar being priced, oil. Fossil fuels, what's run the world. If you want to charge your phone, you want to drive, you want to fly, you want to eat, you want to do anything, you need energy, right? And fossil fuels, oil, petroleum, that is today's energy. That's what's catapulted humanity over the last 200 years. And so I give you guys that context that a lot of the dollar has been backed by violence. And when I say violence, I mean the military. And so it is a national security threat if we need China to produce weapons and produce them in a timely manner. If someone wants to pick a fight, whether it's with us or one of our quote unquote allies, well, we got to be there to have their back, supposedly. Again, I'm not a war guy. I'm not a violence guy. I wish there was no war. I'm just trying to break down what's going on. Someone picks a fight with the U.S. or one of its allies, the U.S. has to be there, not only because we have a big ego and we like to assert ourselves, but even more so than that, It's what backs the U.S. dollar is the fact that you do not take the other side of the United States of America, because we will show up with the military and make sure you agree with us. And that's just been a fact. Very, very, very unfortunately so. So I continue reading. As slowing shipments of products containing obscure elements like dysprosium and terbium, sorry, don't know what these are, but I try my best, begin to pinch industries from autos to defense, the U.S. and other countries are quickly reaching their weakest point. Ford Motor Company, Suzuki Motor Corporation are halting some production. Elon Musk says the shortage is hurting his robotics business, and governments are scrambling to secure some suppliers outside China. Now, I've said on this show there are rare earths in Brazil. Brazil is going to continue to become relevant in global trade talks. But the point was this, and what we said on this show. It's a national security threat that the U.S. needs China for weapons and for a lot of things. So they reference Ford, Suzuki, and Tesla here. That was the very mild version. The reality is and I'll talk about it in a second. I'm going to play you guys a really shocking video from Secretary Rubio. But we need China to a degree that the public does not understand yet. We've been saying this on the Jack Mallard Show over and over and over and over again, and it is just remarkable that this is being written now in Bloomberg. Now, this is my favorite part. I don't want to be a I told you so guy, but sometimes I'm an I told you so guy. So let me read. For all the U.S. bluster, company executives and analysts said the episode showed how quickly China's advantage in rare earth trade can be used to secure concessions from countries whenever tensions escalate, as they almost certainly will. Quote, while the U.S. appears to be taking the lead in reviving trade talks, China may be quietly securing the upper hand, said Hebe Chen, an analyst at Vantage Markets in Melbourne. China is, quote, weaponizing its dominance in rare earths to shift the balance in negotiations. Okay, so if you guys remember on the show, I said, hey, guess what? The U.S. wants all of us to think it has leverage in negotiations. A big, beautiful deal. We just went and we signed the best deal ever, an amazing deal. Scott Bessent is a king. He's incredible. We are getting everything we've ever wanted. No, we're not. We've never had the leverage. Trump went maximalist tariffs position, and it took 5 days for him to realize that no one is lending to the United States. The bond and treasury market are out of control. This is far too gone. You have to steer the ship away from crash. China is going to grab us by the nuts. Sorry, excuse me, kids show. China's going to grab us by the balls and twist and say, watch who you're talking to. And this is far more dangerous than anyone thinks. We're going to have to print far more money than anyone thinks. I've been saying this for the last month on this show. I did not think it would take Bloomberg 3 to 4 weeks to say, yeah, the Jack Mallard Show was right. You guys are right. Bitcoiners are right. Again, hey, not an I told you so guy. That's not me. Couldn't be me. But I told you so. We told you so. Us Bitcoiners told you so. So this is direct quote in Bloomberg. China is weaponizing its rare earths, which we need, yes, for robots. We need for AI. We need for groceries. We also need for weapons. We also need for our military, which is a direct threat to our ability to impose the U.S. dollar down everyone's throat. Now, the Bloomberg article I found fascinating because Bloomberg is where a lot of financial markets gets their news. And so it is very, very particular and poignant that it was reported by Bloomberg. That is not a drill. That is real life. But this is from Secretary Marco Rubio. This is 3-minute video. So I apologize. It's just what this show is, guys. I don't have a producer. I do this myself. I think the 3 minutes are valuable. I'm going to play this video. I really want you guys to just listen, pay attention, and I will comment on it after. But this is what we just read in Bloomberg, what we've been talking on the show to the next level. He clearly is Secretary of State, clearly says in very plain English, we're in trouble. We're in trouble in this administration and the whole reshore, we got to start working on stuff. If we continue to let this perpetuate where we don't produce our own stuff, we continue to be the world reserve currency and run these deficits and rely on China, GG's, game over. So let's hear what Secretary Rubio has to say.
Thank you. Industrial capacity mattered in terms of national security. And that's never changed. That's always been true. And so today what you find is because of all of those years of neglect, because of the loss of industrial capacity, we didn't just undermine our society. We didn't just undermine our domestic economy. We've undermined our position in the world. And what you will find, and what we find even now, is that increasingly, on geopolitical issue after geopolitical issue, it is access to raw material and industrial capacity that is at the core both of the decisions that we're making and the areas that we're prioritizing. Now, the technologies are different, but nonetheless, that is what we're increasingly prioritizing. And that's become really apparent to me. I think it was even going into this job, but in the months that I've been there, on place after place, every country in the world is now pitching themselves as a source of rare earth minerals. Every country in the world, by the way, they're not that rare, so every country has access to it, but it's become a big, that alone is not enough, because you have to have access to rare earth minerals, but then you have to have the ability to process them, and you have to make them into usable material. And frankly, what the Chinese have done over the last 25 or 30 years is they've cornered the market. And now we are in a crunch. And I say we, I mean the rest of the world is in a crunch, because we have realized that our industrial capability is deeply dependent on a number of potential adversary nation states, including China, who can hold it over our head. And so in many ways, the nature of geopolitics is now adjusted to that, and is adjusting to that. And it will be one of the great challenges of the new century, and one of the priorities of this administration under President Trump, is to reorient our domestic and the way we pursue geopolitics to take into account for the fact that you can never be secure as a nation unless you're able to feed your people, and unless you're able to make the things that your economy needs in order to function and ultimately to defend yourself. And it's become one of the highest geopolitical priorities that we now face. Not simply access to raw material, but figuring out how can we have more industrial capacities in these critical fields, ideally domestically, but if not here, then diversify the global supply chain so that it cannot be used against us as a point of leverage at a time of potential conflict. In fact, unless we fix it, some of these conflicts will never happen, because we will never be able to enter. The amount of leverage they will have on us will begin to constrain our ability to make foreign policy. Unable to get into a tremendous amount of detail, let me just say that even as I speak to you now, there are a number of foreign policy issues in which we're having to balance what we would ideally want to do with what we may not be able to do in the short term until we fix these problems.
Anyone else hear that? I mean, that couldn't have been more cut and dry. Actually, I might just replay one part. I mean, guys, he said, even right now, there's a difference between what we would want to do and then what we can do. And he said, in plain English, in order to be a secure nation, you need to be able to feed your population, provide materials to your population's economy, and defend yourself. He's implying that we're not that right now. Okay. Well, anyways, I won't play it again, but to go back, this Bloomberg article, these direct quotes, they're saying the quiet part out loud. Secretary of State Marco Rubio. Okay. Anyways, that didn't take very long. Now did it? We don't have the upper hand with China. We'll come to some form of truce. Tariffs aren't going to work. We've been saying this on the show. Trump's going to turn to capital controls. That's what's in the BBB, baby, the triple B, the big, beautiful bill. So this first opener, Man, we've been right, guys and gals. Those of you in the chat, we've been spot on with this. We've called it. We don't have the leverage on China. The rare earths are a problem. The United States has to start producing some of its own stuff. That is weak dollar. You need a weaker currency to manufacture and produce locally to export, and you're going to have to print a lot of money to make up for decades and decades and decades of doing no proof of work. Previously, all the U.S. did was print pieces of paper and ship them out to get the stuff they need. Now we have to actually do the work to build the stuff we need. How do you think we're going to pay for that? Where do you think the capital to fund a factory or to fund people to learn new trade skills is going to come from? You think we can just print that too? No. Newsflash, you cannot print proof of work. That's the whole point. Sorry. So onwards we go. Now this, how do I zoom this out? All that I'm saying combined with this news. Gold passes euro as second reserve asset as central banks buy. This was reported by the ECB, the European Central Bank, came out, said, gold has passed us, the euro, as the second asset holding cash balances. Take a look at this chart, you guys. So here's what we're seeing on the left. The blue is the dollar. This little yellow here is the euro. The orange is, basket of other currencies, so everybody else. And then the green is gold. Look at gold on a tear. So you saw gold here after the 2008 financial crisis. And then you see gold now coming again at 20%. So gold is larger as a higher share of gold in global foreign reserves, larger than other currencies, larger than the euro. Also noteworthy, the dollar now officially under 50%. Officially under 50%. Big deal. Look at when it has breached this. Only briefly after the global financial crisis, but it's traditionally been over half of foreign reserves. It is now under 50% and falling. Gold is 20% and growing. Central bank gold purchases in the price of gold. Look at 2022, 2023, 2024. That is not just marginal growth. That is substantial growth. They've nearly doubled the amount of gold they're buying. 100% growth. This is not a drill. For everyone that is saying, oh yeah, I'll just wait for the world to de-dollarize. I'll wait for neutral reserve assets to be relevant again. I'm like, are you paying attention? What do you think is happening right now? We're literally living through it. Pull up a chart, pull up a Bloomberg article, pull up what anyone is talking about in Washington, D.C. Here's another. This is from the European Central Bank website. Let me read. Moreover, concerns related to sanctions and the possible erosion of the role of major currencies were cited by some central banks in emerging and developing economies. Excuse me, what? Let me read that again. What? The European Central Bank said that? One more time. Moreover, concerns related to sanctions and the possible erosion of the role of major currencies. So sanctions, the violation of property rights, theft, violence, stealing from people was one concern, and the other was the possible erosion of the role of major currencies were cited by some central banks in emerging and developing economies. 1 out of 4 such central banks referred to, quote, concerns about sanctions, end quote, or the, quote, anticipation of changes in the international monetary system, end quote, as determinants of their investment exposure to gold. What? Have we not been calling this? The recent accumulation of gold reserves by official institutions tends to be concentrated in very few countries. Turkey, India, and China, for instance, top the list of the largest purchasers, jointly accumulating more than 600 tons of gold since the end of 2021. Now, I blew up this asset so you guys can see this. Okay, I'm going to have to turn my head here to read this. Long-term store of value / inflation hedge. I'm going left to right. Performance during times of crisis. Effective portfolio diversifier. Historical position. No default risk. Serves as a geopolitical diversifier. Highly liquid asset. Concerns about systemic financial risk. Serves as valuable collateral. Lack of political risk. Domestic gold production. It's a policy tool. Concerns about sanctions. There we go. Anticipation of changes in the international monetary system. This is the last one on the far right, part of a de-dollarization policy. Are we heading toward a world of neutral reserve assets or what? Or what? You blink and all of a sudden it's happening. I've been saying on this show week after week after week after week, all you got to do is read the articles, read between the lines, pick up what everyone's putting down, follow the hard money. Okay, now all of these applicable to Bitcoin. Let me read these again. Don't think about gold, think about Bitcoin. Long-term store of value / inflation hedge. Check. Performance during times of crisis. Check. Effective portfolio diversifier. I'd say so. Check. Historical position. Again, this is why I think we'll be in a gold / Bitcoin world and then eventually a Bitcoin world because Bitcoin's new. So no check. No default risk. Check. Serves as a geopolitical diversifier. Check. Highly liquid asset. Check. Concerns about systemic financial risk. Check. Serves as valuable collateral. The most pristine form of collateral, I might add. Check. Shout out Strike Lending. Lack of political risk. Check. Domestic gold production. So just replace that with Bitcoin production. China is now mining. Russia is now mining. The US is now mining. Check. Policy tool. Check. Concerns about sanctions. Check. Cannot sanction Bitcoin. Anticipation of changes in the international monetary system. Check. Part of de-dollarization policy. Check. 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 Next. Okay. This is where it gets a little bit more interesting as it relates to bonds, treasuries, because guys, the flight to safety used to be, and I say used to be confidently at this point, it used to be treasuries. So this is from Mohammed El Arian. He's a professor. You've probably seen him on CNBC before. I think he's a professor at Cambridge. I don't know, some important institution. Whatever. He's smart though. I like the guy. I like this tweet. Can't say I like his work. I don't know his work that well. Anyways, whatever. Distracting myself. Here we go. As I've been highlighting recently, don't look to U.S. Treasuries for, quote, safe haven or, quote, flight to quality flows. Their yields barely budged over the Israeli attack on Iran. Instead, watch gold below and silver. The flows are happening. They're just not headed to treasuries as historical experience would suggest. This is further discussed in my FT column this morning. So his point is the flight to safety, the risk off has traditionally been, call it the 10-year. Yields on the 10-year didn't budge, which I'll go to the next one. They didn't move. Nothing. The 10 years yields noticeable rise today further reinforces the historically unusual behavior of U.S. government bonds. This is occurring amidst continued Israeli attacks on Iran and, more generally, a thickening geopolitical cloud hanging over the global economy and markets. So, for those that don't know, the way bond math works is when people sell bonds, the yields rise. Basically, they're saying, I don't want these bonds. You need to pay me more to own this thing, right? So, you're paying me 4%. I need 5%. So, when someone says, screw this 4% bond, and they sell it, it raises the yields. So when you see yields rise, that means people are selling bonds. There's a less interest in bonds. Bonds were traditionally the risk off, the safe haven. If there's a war, if there's a crisis, everyone can run into the risk-free return. And what Muhammad is saying is this is what he calls unusual behavior. To Bitcoiners, this is expected behavior. We've been calling this on the Jack Mallers show. But point is, we'll take historically unusual. That's fine. Whatever. Historically unusual, meaning, people look at this asset class as a flight to safety. And if you contrast it versus gold's flows and Bitcoin at and around all-time highs, think about it. Bitcoin all-time highs, gold all-time highs, bond yields up. That is the USTs. These things are not the safe haven asset anymore. We are very, very quickly progressing towards a world of neutral reserve assets. Bitcoin is going to be the inevitable winner over the coming decades of the world we are rapidly ascending towards. This fascinating. So this is the SPR This is our petroleum reserve. So this is basically like the U.S.'s strategic, so SPR, strategic petroleum reserve, like a strategic reserve of oil for us. So if you can see on the far right here, Biden ran this puppy down, trying to get elected, trying to get Kamala elected. And so the point is our SPR is at historic lows. So this is going, if you guys see, this says 1990. So we're going all the way into, 1980, 1970s. We're at historic lows for our strategic petroleum reserve. Not good. So the point is, if this continues on in Iran and Israel, we're not going to have a way to defend the price of oil. Interesting, fascinating. With the fragility of the treasuries market, with yields going up, with gold going up. Again, I think you're going to have to print a lot of money. You're going to have to implement some form of yield curve control. You're going to have to implement capital controls. There's going to be a lot that has to go down. I'm not saying World War III, the world's going to end. I do not think that's the case, at least right now, to whoever you believe in. Let's hope not. But I do think gold, Bitcoin, up. I think persistent inflation. I think they got to let things run hot. I think dollar down. Okay. This one, fascinating. This is China monthly exports to Saudi Arabia. Basically, the world is starting to figure out ways to settle with each other without the dollar. And so you can see China's payment networks are going parabolic. They're figuring out ways to settle without the dollar, and they're really starting to use gold. They're really starting to use gold at a pretty substantial scale. So the last thing on this rant, really, Bloomberg is making it, Bloomberg and Secretary Rubio, they're making it easy on me. I don't even have to get wound up anymore. They're just saying what I say. It's like, yeah, sure, you guys agree with me? Okay, Bitcoin's going to the moon over the next few years. All right, end the show. This is a chart. Shout out Luke Groman for the inspiration here. This is a chart that shows, so in the white is the Treasury bond ETF, okay? In the pink, what is that? Reddish pink here, that is gold. And then in the purple is Bitcoin. And really the point is to go ahead and show, this is dating back to the middle of 2023. TLT is down almost 40% down. So we're talking about holding bonds is an utter disaster. You're getting murdered. 60-40 portfolios are getting murdered. This is why Bitcoin in the capital markets is seeing such a bid. This is why the ETFs are seeing such a bid. Fixed income, bonds, bad idea. End of an era. We're moving on to a new monetary regime. We are reordering global capital flows. And you'd say, well, what is picking up the bid? What are we moving to? Well, you can just clearly see this little reddish pink and purple. It's very obvious. So obviously, Bitcoin is, in my opinion, the better version of gold. So whatever you think gold is going to do, multiply it by at least 2 or 3 for Bitcoin. And so you can see as this white line trends down and continues to bleed out, then the pink and the purple get increasing amounts of life. And so even recently, look at Bitcoin catch this massive bid, this sharp line. And if you see at the very end here on the furthest right, it's starting to tick up again on the back half of this Iran and Israel, on the back half of the China trade deal negotiations. So the title of this YouTube video, this episode 69 of Mailbag Monday, is Bitcoin and Gold, the new safe haven assets. I really do believe we're living through the transition of, the dollar as this predominant, overwhelming world reserve currency, where we're sanctioning countries like Russia. We're using our military violence we got to produce our own stuff. We got to weaken the dollar. We got to focus on our deficits. All of this is becoming massive problem, and it's happening right in front of us. I was at a lake house this weekend celebrating family birthday, and everyone was like, I get what you're saying, what you're saying doesn't sound wrong, but I'll just wait for gold to become a more material part. I'll wait for bonds to start to fall apart. And it's always fascinating to see that. Everyone thinks that you're going to go outside and houses are going to be on fire and dollars are going to be on fire and the stock market's going to be bleeding out and There's going to be zombies in the streets. And the reality is that's not the case. These things, like the world will go on. The sun will come up. Nothing's going to fall apart. Everyone in America, everyone assumes that, this is the collapse of an empire and we're all going to die. And whenever I see that, I'll buy all this Bitcoin and I'll come share your bunker with you. And it's all happening right in front of our eyes. You just have to pay attention. Like Bitcoin's gone from zero to $110,000 a coin over the last 15 years. What do you think is happening? The world is moving towards sound money. So anyways, hopefully makes sense. But if it doesn't, that's why we do Q&A. But Bitcoin and gold, the new safe haven assets, eventually Bitcoin only. There is no second best. We're living through it. The U.S. does not have negotiating leverage with China, and bonds are bad. Bitcoin is good. I could not be more bullish Bitcoin if I tried. All right. This is a good one today. Efficient. I'm operating efficiently. It's only 5:37. I got to be gone by the top of the hour, but I got plenty of time. Let me pull up the questions. Shout out Lavinia. Shout out my team. Sitting in the chat, hanging out with you guys, jotting your questions down. I got a bunch. So let me, without further ado, pull them up and start answering. So if you'd like your question answered, put it in the chat. And when I say the chat, I'm, mostly just talking about YouTube, if I'm being honest. We're trying to integrate more technologies. I just got a Rumble account. Shout out Rumble, big fan. But I haven't set it up yet to stream. So we'll get more chats incorporated. We'll get more platforms incorporated. But for now, head over to YouTube if you can and write your question. And let's do about 20 minutes of Q&A. All right, first topic, macro and markets. Won't the economy crash if Trump gets out all foreign investors who sell their real estate and stocks, et cetera? Yeah, so the question is, so Trump came out with this American First investment policy in February, which basically more or less said, get your money out of the country. And the reason he's doing this is because Trump and the administration, and this is kind of bipartisan at the end of the day, has been very clear in saying, we print dollars, we ship those dollars out to import goods and services. You can think of these dollars as U.S. store credits. They can't really be spent anywhere else instead of inside the United States. So countries then take all these U.S. store credits that they've been importing from the United States and they go shopping. And traditionally, it was just buy bonds. No one wants those pieces of shit anymore. So they buy Mag 7 stock, they buy real estate, they buy farmland, they buy all of our scarce desirable goods. That's not good for us. That's not good for Americans either. You're creating this wealth gap. You're driving up the price of assets, which are predominantly owned by those on the coast, call it California and New York. And you're making the middle of America significantly poorer. And this has gotten so bad that Trump won the popular vote by appealing to the middle of America. So anyways, all that to say, it's a good question. If everyone has to sell their real estate, sell their stocks, isn't that going to cause these assets to crash? Yes, until we print money to make them go up again. So it is in my opinion that the U.S. is going to provide the liquidity to financial markets to juice things like the S&P 500. They cannot afford for these things to fall. Now, I think things like Bitcoin will grow to outperform and break correlation with things like the NASDAQ and things like the S&P 500. And I think that there will be different levels of performance because China can take its trade surplus and plow it into Bitcoin. China can't do that for the NASDAQ anymore. So Bitcoin, gold, and the Mag 7 are all going to benefit from U.S. money printing. But only Bitcoin and gold are going to benefit from China not being able to buy the Mag 7 anymore. And they have to find a neutral asset that protects their time and energy. Does that make sense? So I think Bitcoin and gold, Bitcoin specifically, is going to outperform anything and everything by a long mile, by a long mile. But I don't think the U.S. can afford to have assets go down. For those that don't know, a large revenue stream for the United States to pay its interest expense, so pay the interest on its debt, is capital gains tax receipts. And so if all of a sudden Americans are poor and they don't sell their assets because their assets aren't up and then they don't go spend it in the economy, to this listener's question, that'd be a huge problem. So my suspicion is they're not going to let these assets go down. They're just going to print the money to ensure they go up, which would bring the dollar down. This is the whole idea, is that the only way out is by debasing the currency. No matter how you slice it, it's the only way out, unless we live through some severe austerity, where we go through a Great Depression times a million, like the greatest depression we've ever been through, which, by the way, would also be good for Bitcoin in a different, more, fucked up way, but it'd be good for Bitcoin nonetheless. Bitcoin wins at the end of the day no matter what. The dollar has to go down at the end of the day no matter what. The problem is austerity never works because people can vote for someone else. That's the problem with politics and stuff, is you can't actually do the hard things and do the proof of work because people will just vote you out. So if we go through austerity and there are cars on fire in the street and Trump's getting impeached, and so, the politically palatable way through is to continue to print money and debase the currency. It's in my opinion. Does the dollar decline first and then the market, or does the market decline causing the dollar to decline? I don't think the market, kind of piggybacking off my last answer, I don't think the market is going to decline. Market meaning the stock market, I think you're saying. I'm not sure, though. I don't know if you're talking about the more wider economy. But the only things that matter are the stock market, right? The stock market is the de facto savings account for the world more broadly. Soon it won't be, and more particularly to the American people. And so I don't think the stock market will have a persistent decline. You've seen these things. I mean, guys, in April, for the Liberation Day or Liberation Week, the stock market was down 20% at one point. It ended the month up. These guys cannot afford that thing to have red candles. So it has these little corrections and everyone freaks out, and then it resumes up because it has to. It's part of the structural fabric of the American financial system. And so I think that the dollar will continue to get debased against assets. And, the harder the asset, the scarcer the asset, the more globally accessible the asset. So now we're talking about capital controls where not everyone can go shopping in the United States anymore. So if you have an asset that is accessible to China, accessible to Russia, accessible to Brazil, these assets, these global neutral reserve assets will continue to outperform everything else. Bitcoin will be the winner. Do you think this unwind of Bitcoin and gold becoming the safe haven assets instead of the American bond market was inevitable? Would this have happened no matter who is the president? Yes. I do think Trump, views himself on a mission from God. He's talked about this publicly, in his campaign. He almost got shot in the head, and he views himself, on a mission from God to fix America. I'm not commenting on that. Whatever, it's what he believes. I do think that belief is fast forwarding a lot of this stuff. We went from, hey, let's focus on cutting the government with Doge, and let's take the richest, most, glorified entrepreneur in Elon Musk and have him fix our problems. And in a month, we realized that's not going to work. And then we tried tariffs, and in a week, we realized that's not going to work. So we're very quickly cycling through, this story is going a lot faster. So I will admit that. The story is going probably a bit faster than if Kamala won. But nonetheless, yes, monies want to be won. And monies compete most particularly over their hardness. What's the hardest money that everyone has access to? Hardest in reference into how hard is it to make more of it? And Bitcoin is inevitable from that standpoint, as long as it has the monetary properties we need, as long as it's divisible, as long as it's portable, as long as it's easy to store, as long as it's easy to verify, then it's a question of hardness. And so Bitcoin was designed by us humans. Think about it. Bitcoin is the only market money that we made with our hands to be perfect, and we engineered with technology to make better forever. Bitcoin's a software project. It's going to be getting better forever. We found gold in the ground. We didn't make it. We didn't make it to be perfect. That's the part that people don't understand is we literally purpose-built Bitcoin and continue to work on it to be perfect at the job money is supposed to perform in the market. And so, yes, from that standpoint, it's absolutely inevitable. Bitcoin is not optional. What people don't understand is, by you not adopting Bitcoin, you are getting poorer in Bitcoin terms. The meme, have fun staying poor is real. And so it's not optional. It's not like, I'm just not a Bitcoin guy. Well, then you're not I want to live in a big house guy. You're not I like vacations guy. You're not I'm going to eat high quality food guy. You're not a high quality of life guy. You're on a sinking ship. So owning the hardest money isn't optional, because as the rest of the market around you owns the money, you're increasingly falling into abyss. So it's not optional. It's really not. It's just how long does the transition take? But it's absolutely inevitable, in my opinion. Do you think there are going to be no pullbacks then in Bitcoin similar to gold? To say that gold didn't have any pullbacks is probably incorrect. I mean, gold just operates over much longer, market cycles. I think Bitcoin market cycles are likely different than the past. Hold on, though. Don't you dare clip this and put it on Twitter that I said this time is different. I do believe we will have bull and bear markets. I absolutely do, because I think that's just human psychology. That's reaching euphoria, and then that's, you have sellers that overwhelm the market, and then people get despair, panic. So I think human beings are predominantly what causes, our emotions are what cause these bull and bear cycles, in my opinion. So I do think we will experience dips and ones that make your stomach turn. Absolutely. But I do think we're in a structurally different era where these 4-year cycles are clearly, this one's clearly different. We're clearly correlated to global liquidity. We're clearly correlated to the macro environment. Bitcoin is clearly the best expression and the most sensitive index as to how much money is being printed around the world. And so if the next few years continue to be a lot of stimulus, a lot of dollar liquidity, then I think Bitcoin's going to continue to catch a bid. I really, really do. Now, it doesn't mean it can't have corrections. I don't know. I don't know who asked this question, but were you around when Bitcoin went from 100,000 to 70,000? The vibes on this show were very not good. Bitcoin down 35%. I thought you said Bitcoin was the greatest ever. So, I don't know. Is that a dip? Did that make people's stomach turn? I'd say so, judging by the emotions in the chat. So Bitcoin's still going to have these corrections, 20%, 25%, 30%, inevitably, maybe 70, 80%. But I think that 70 and 80% comes from like $1 million a coin. So I can imagine Bitcoin ticking $1 million a coin and falling all the way down to 300,000 at some point, years ahead. Who knows? I don't know, but I definitely don't want to assume that market cycles are over. It sounds dangerous. Do you think gold will outperform Bitcoin through the end of 2025? No. I think gold has been leading. Central banks have not yet started buying Bitcoin. That's the big differentiator right now. Bitcoin's still too small of an asset, and I don't think any central bank wants to be first into buying Bitcoin. That's what's, really driving gold. Central banks are buying, we just went over it on the show, a tremendous amount of gold. China's buying a tremendous amount of gold. China's mining Bitcoin. Russia's mining Bitcoin. These countries own Bitcoin. These sovereign wealth funds own Bitcoin. Don't make a mistake about it. But their allocations have to be smaller because the asset's smaller. You make too big of a move, you're going to run the price. And so, front run yourself. So what we've seen is gold leads Bitcoin directionally, then Bitcoin catches up and some. And so I continue to think that will be the case. And I think Bitcoin will vastly outperform gold in the grand scheme of things. Is gold going to outperform Bitcoin on this day or this week or this month or the rest of this year? I don't know. My default answer is no, because on net, Bitcoin outperforms. But, in small windows, it's totally possible. But, Bitcoin's the better money. It's been the better performer its whole life, and I think it'll continue. There's no reason that's going to change. How do you see Bitcoin's value stated in the future without being tied to any fiat? What would that look like? Well, like any money, it's tied to goods and services. So, Bitcoin, if Bitcoin is not tied to fiat and isn't priced in fiat, and then this is hyper Bitcoinization, this is in a way, way, way future state. You walk around and your sandwich is, 2,200 sats, and your Coca-Cola is, 400 sats, and you go on and you live your life. But the point of a money is it's the one market good that you don't consume. So a sandwich and a Coke, or a car or an airplane, I consume the airplane to fly me. I consume the car to transport me and drive me around. I consume the sandwich and the Coke as calories to give me energy to live. Okay. I acquire the Bitcoin not to consume. People say often, I can't see it. I can't put it in my mouth. I can't put it around my neck. It's garbage. No. Money's actually, you don't consume the money. You don't eat it. You don't wear it as jewelry. You consume, money's the one market good you're consuming in exchange for your effort, your time, your energy, and your labor not to consume. You're acquiring the money to save it and then later exchange it for the value that others are creating for you. So you exchange your value creation for money, and then you save the money until you're ready to then later on exchange it for the value others are creating. And so Bitcoin will just be priced in the goods and services that others are producing, and you'll price your goods and services in Bitcoin as well. So we're far from that, in my opinion. I think this stuff will take longer than people expect. Once you figure it all out and it makes a lot of sense, then the end state is obvious. But what isn't obvious is that getting everyone else there is going to take a while. So people get excited. Do you think Jerome Powell will lower interest rates soon, or will he get fired? What if they fire him? A new guy lowers the short end of the curve, but the world doesn't want the long end. I do think Jerome Powell will be forced to lower interest rates at some point. You've seen, inflation data come in lower. So he has every excuse. Clearly, Jerome Powell's Democrat, obviously. He cut for Kamala. That was obvious. At the end of the day, though, I just don't think the Fed really matters right now. I think we're living in, some variation of fiscal dominance. I think what Scott Bessent does and says matters much more. Eventually, he will have to cut. I don't think he's going to get fired. I really think that that's dangerous. I mean, trust in the dollar is paramount and important. And if you imply, leadership changes like that and Trump, rolling the Fed effectively into the Treasury in some weird way and being a part of the government, what am I doing? No matter what, this is all dollar down, assets up, anyways. So yes, I do think the Fed will have to participate. I think people are mistaken in looking at the Fed's every move and expecting it to matter right now. Bitcoin has gone from 20,000 to 110,000, post Sam Bankman-Fried blow up, to now Bitcoin's gone from 20,000 to 110,000. It's almost up $100,000 in pure spot from that point to this point now. And the Fed's only hiked on net. If I would have told you the Fed's going to hike rates as fast as they've ever hiked and Bitcoin's going to hit all-time highs and be over 100,000, if I would have told you that after Sam Bankman-Fried got busted, you would have thought I was crazy. But the reason is, dollar liquidity and the printing of money has come elsewhere. I think people are too focused on QE and what Jerome thinks. It doesn't matter right now. Eventually, he'll have to step in because no one wants the long end, to your point, and because there's yield curve control. Someone has to lend money to the government, and eventually that someone will be the Fed. That's my opinion. But for now, ignore him. He doesn't matter. When do you think the U.S. starts accumulating for their strategic Bitcoin reserve? I've been thinking about this recently. I think there's just too much going on right now, to be honest. I would say we'll probably hear follow-up remarks at the end of this year, if I had to guess. I'm just speculating. I don't have any insider information, to be honest. But, following what's going on in real time and everything that's progressing on a weekly basis and just, hosting this show just goes to show the negotiations. Now there's war involved. There's tariffs. There's capital controls. There's trying to get bills through Congress. I think the last thing on the U.S.'s mind right now is Bitcoin, and arguably rightfully so, because the U.S. doesn't operate in any surplus. We operate in this massive deficit. So the only way for us to buy new things would be to print money to buy them. And right now, I don't think Trump has the political capital to do that. People aren't thrilled with how he's kicked off this administration. He's gone super maximalist, super aggressive. Things take time. So it might work. It might not. I'm not saying it's been good or bad, but it's certainly been volatile. It's certainly been rocky. It's certainly been interesting. So I don't think he has the political capital to print money and buy Bitcoin right now. And if you can't print money to buy Bitcoin for the U.S., you can't buy it because you don't have any extra cash. If U.S. was cash flow positive, Trump could turn on, a little DCA or something, but he can't. We're already, the whole focus of the whole country is how much money we're bleeding and how it's causing inflation. It's going to ruin everyone's lives. And you think he's going to cause even more inflation to buy Bitcoin for Bitcoiners? Not anytime soon. I think, we got to come to a truce with China. The Middle East tensions have to resolve of themselves. And then hopefully they call it some budget neutral ways they can start to discuss Senator Lummis's Bitcoin Act. But I think this stuff has to take time. Their plate is more than full. Their plate is spilling all over everyone's lap. Thoughts on Circle, USDC, and a Trojan horse for CBDC? I think personally, I don't understand Circle's business at all. They're like a hardly profitable business, but they own treasuries that are paying. I mean, I think Tether makes more in a week than Circle does in a year, which doesn't make any sense because it's the same business. Like if Circle, everyone says like Circle's 25%, of Tether's size. Okay, then why doesn't it make 25% of the money? So it's an awful business. And the reason is because it costs so much money to get people to use their stablecoin because you're trying to get Americans off of their Chase bank account and using USDC. I'm an American. Why the hell would I use USDC? I don't understand. I don't need to use USDC. I could own T-bills if I want, the overnight rate, if I want yield on my dollars. I don't own any dollars, but again, for example's sake, I can get a Chase account. I can get Cash App, Venmo. Why do I need USDC? I don't need it. The reason people use it is because Circle pays them to use it. Circle pays Coinbase a ton of money. Like a third of Coinbase's revenue is from their Circle integration. So it's a break even. And as soon as rates get cut and there's more competition, it'll be a loss leading business. It'll lose money because it has to pay people to use its product. Meanwhile, Tether, who gives the dollar to people that actually need it because they don't have a Chase account, because they don't have Cash App, because they don't have Venmo, they're printing money because they're giving people the dollar that actually need it, and they're turning around and they're being a buyer of U.S. debt who actually need it. So they're solving a real problem, and Circle isn't. I think the stock market's reaction to Circle speaks more to the fact that, look at the stock market's reaction to what I'm doing at 21. Look at the stock market's reaction to strategy. Look at the stock market's reaction to anything related to this industry. This industry is posting real returns. Real returns. We're making real money. We're building real balance sheets. We're doing real change. We're solving real problems. So I think Circle's getting grouped into, everyone pile in to, the new trendy IPOs. But the business doesn't make any sense to me. I can't believe they don't make any money. I mean, they own tens of billions of dollars of U.S. debt and rates are at 4.5% or something. How are you not making money? What are you spending that money on? It's outrageous. I don't know. I don't understand it. Tether's got 100 employees. They're making a fucking $1 billion every other week. How are you not making any money? I would not be long that business long term. I think it's, trendy hype. Personally, what do I know though? What would happen to Bitcoin and Bitcoin mining if through some amazing innovation, energy became 1 million times cheaper? Well, I've always considered, we're transitioning to Bitcoin and industry questions now. I've always considered mining an incredibly difficult business. Very, very difficult. You're effectively competing with humanity over who can harness the cheapest energy. How are you going to compete against the United States, Putin, China over energy access? You're going to lose at the end of the day. It's really important that anyone can mine, but building a business on that sounds impossible. It's just something that I don't have expertise in, and it sounds incredibly, incredibly difficult. So that's my opinion on mining at large. You're even seeing some of these mining companies, raise debt and just buy Bitcoin instead of mine it, which is hilarious, right? It's like the equivalent if I gave a corn farmer $1 billion and the corn farmer then took the $1 billion and walked into Whole Foods to buy corn. It's like, wait, you're supposed to be the commodity producer. You're supposed to farm the corn cheaper than I can buy it at the grocery store. If you're going to raise money and buy it at the grocery store just like I can, then what's the point of you being a miner in the first place? So, I think it's a very tough business. Now to answer the back half of your question, what if energy became 1 million times cheaper? Well, that's the point of what's called the difficulty adjustment in Bitcoin. So for those that don't know, Bitcoin is able to measure how much energy is being contributed to mine Bitcoin. And it does this by saying how fast people are solving the math problem. So if blocks are coming in, which meaning people are solving this, probabilistic math problem, if blocks are coming in every minute, that means a lot more energy has come online to solve Bitcoin's proof of work problem. And that then Bitcoin will self-adjust and make the problem harder. And it's always optimizing to solve for blocks to come in about every 10 minutes. Okay. And so for that reason, if energy became abundantly cheaper and a bunch more came into Bitcoin, Bitcoin would get exponentially harder to mine. If for some reason energy became exponentially more expensive and a bunch of miners fell off the network, Bitcoin would get exponentially cheaper to mine. Imagine if everyone stopped mining Bitcoin today and Bitcoin self-adjusted itself where you can plug in your laptop and start mining. You can be getting, 6 Bitcoin a day just by having it run on your laptop. Well, everyone would do that because that's a ton of money, and then it would readjust and get harder again. And so it's always optimizing for a consistent rate of Bitcoin blocks. And so it's always getting a little bit harder or a little bit easier based on how much the world is pointing energy at the Bitcoin network. So Bitcoin is very, very secure. It's one of Satoshi's most genius innovations is the difficulty adjustment, actually. So you don't have to worry about Bitcoin. I would worry about mining businesses over the long run, but I'm speculating. I don't understand. I'm not a professional there. Just my opinion. Watching a commodity producer raise money and just buy the commodity instead of mine it, it's like, isn't your business supposed to be you can produce it cheaper than me? That's weird. I finally read the BTC white paper. Wow, I love that for you. Can you explain how each owner transfers the coin to the next by digitally signing a hash of the previous transaction in the public key of the next owner? I can't explain it. I'm not entirely sure what you're looking for here. But yes, there's in Bitcoin, there's a concept of inputs, outputs. The way a transaction is put together is actually fascinating. Like I remember learning about change for the first time in Bitcoin in my mind. Like, wow, it's actually a lot more logical than one would assume. But there's a very great quote in Bitcoin. Bitcoin is a giant chain, yet it ends slavery. But when you reference digitally signing a hash of the previous transaction, so you're referencing the previous transaction, a hash of it, and you're signing that over to whoever has the private key to this public key. So, if I say you have this public key, I'm going to take, the previous transaction, sign the hash and assign it to this new owner. And that then allows whoever has the private key of, this new owner, this new public key is allowed to then do the same. So that is effectively transitioning ownership over the asset, over the UTXOs, is saying you get to now spend them. I no longer have the privilege of cryptographically signing a private key to the correlated public key. So I don't know if that makes sense. This is explaining Bitcoin's cryptography and Q&A is probably not the best use of this show. But if you guys are all interested, I'm happy to do a video or make that a section on the show at some future episode. But hopefully that's helpful for now. I worry that what MSTR and other corporations are doing is ruining what Bitcoin... Lavinia's live editing this question. Okay. I worry that what MSTR and other corporations are doing is ruining what Bitcoin is/was supposed to be. Also, so much concentrated control. What are your thoughts? Well, I am the co-founder and CEO of the third largest...
Thank you. Industrial capacity mattered in terms of national security. And that's...
Sorry, that was super weird. I don't know why that just started playing. I'm the co-founder and CEO of the third largest corporate treasury in the world. So I obviously disagree with this. I will say this. Bitcoin is supposed to be money for everyone. And, listen, I get it. I personally am not like the biggest fan of Wall Street. Do I look like the biggest fan of Wall Street? Put my hood on. Do I look like what a Wall Street guy to you? I get it. I wouldn't say that, hedge fund guys is who I would, watch bear games with on Sundays. I get that. But the point is, Bitcoin is for everyone. Everyone needs hard money. Everyone needs access to a monetary instrument that can protect their purchasing power, save and protect their time and energy. Everyone. And so whenever I hear Bitcoiners say, I don't like Larry Fink, I don't like that he's here, kick him out. It's like, well, you misunderstood Bitcoin from the jump, man. You can't kick anyone out. That's the whole point. And so, Wall Street, the fixed income market, the capital markets, these guys need Bitcoin just as bad as everyone else, and right now more than ever, because bonds are getting absolutely destroyed. We're living through a monetary regime change. There's all sorts of, capital controls, tariffs, all sorts of policy decisions being made about their jobs and their life. And so for me, one of the reasons I co-founded the business is because I wanted Bitcoin to be represented well on Wall Street, and I wanted Wall Street to have access to a real Bitcoin company founded by Bitcoiners, where we're showing proof of reserves. Our focus is Bitcoin technology. And between myself and Tether, we feel very confident and capable we're going to be able to deliver Bitcoin well to Wall Street, allow them to participate and benefit from the asset. And so for me, Bitcoin is for everybody, including Wall Street. It's an open source protocol that anyone can buy. And if that ever changes, then we're all doomed. It's going to fail. So that's my personal opinion. You know, for those that don't like that, it's hard for them to kind of rack their brain around the fact that I'm also the founder of Strike, which is the cheapest way in the world for you to get Bitcoin to cold storage. We have no fee DCA and free withdrawals to cold storage. So, you know, I serve Bitcoin products to everybody that needs them. My life mission is to try and give Bitcoin a chance to change the world, the chance I think it deserves. So all that to say, you know, everyone kind of goes through this inevitable realization that your enemies are going to want to use Bitcoin too. And it's probably going to piss you off. And then you're going to have to come to terms with it and you know, respect the fact that that's the point. As far as control goes, there is no such thing as owning more Bitcoin giving you more control. You know, that's proof of stake. Bitcoin's proof of work. So it doesn't matter how much Bitcoin Sailor or the US government or anyone gets. They can't assert any more control over the protocol. That's a part of the design. And so there's no need to worry about control. You know, go back. I was part of the block size wars. Go back to those days, read those books, read that literature. That was already tried and failed, you know, marvelously failed. And so there's nothing to really worry about. I would say, don't worry, be happy. What is it? Everybody's life has some trouble, but if you get angry, you make it double. You know, life's hard enough. You know, if you want to get upset about how people are using Bitcoin, you're doubling the amount of stress and problems you have. You don't need that problem. Bitcoin's for everybody. I would just chill out, find a beach, and respect the fact that people are going to do what they want with their time and energy, as they should. It's the monopolization and control of money is, you know, an ethical and moral violation. You know, Bitcoiners shouldn't seek that out either. Okay. Strike lending. How come I hear that you have loans as low as 10K, but I only see 46K in the Strike app? Because the lending laws in the United States vary by state. And so, unfortunately, the product may differ ever so slightly on a state-by-state basis, although we're working on each state to get the minimums as low as possible, the pricing as low as possible. So, like, states require certain rates, for example. There are certain states where I can't give you a super low rate. Or it's crazy, or I can't even serve you unless I have a rate of like 4%. I'm like, well, I would lose money on that. So the reality is, it's the U.S. has state by state laws when it comes to financial services more broadly, and then particularly to lending. So yeah, we're trying our best. We're actually really excited. We've got Strike Australia. Shout out my Aussies. We got Strike Australia launching at the end of this month, and we are excited about launching our lending product there. We're launching lending to our world regions over the summer. So that's Latin America, I think Africa. That's what we call, you know, the regions of the world where we have Tether integrated into the product. Eventually, we're really excited about bringing the lending product to New York. We're working on our BIT license. California, Texas should be within a few weeks, I hope. What else can I share with you guys? Europe and UK are coming as well. We're taking a really close look at launching Strike Canada at some point this year. So, you know how we do it at Strike. Just head down, proof of work, you know, just do the best we can. But anyways, if we're not in a certain jurisdiction or the app looks a little different than what's seen on Twitter, I would, you know, bet a lot of money, majority of the time, it's local regulations. I've heard you say that you spend on credit cards and then get a loan against your Bitcoin to pay the bill. That's true. I do that. So the way I have multiple loans open on Strike. So for those that don't know, you can open multiple loans. I borrow against my Bitcoin and pay my bills. So I don't own any dollars. I spend on credit. And then when I have bills, you know, I borrow against Bitcoin to pay. And I use the payment at maturity option, so I don't have monthly interest payments. I pay a little bit extra in my overall rate, but I don't owe the money until the end of the term, so in a year. And then the way I do it is when that year is up, I open up a new loan, and I take some of the proceeds from that loan, pay off my old loan, and then keep the ball rolling. So I never am actually selling Bitcoin. I'm just constantly borrowing against the Bitcoin forever to pay off my loans and pay off my expenses. Now, I don't want to pitch that as a silver bullet because, what I do is I only borrow, 5% of my total stack. So if Bitcoin goes through a bear market, I have plenty of collateral where I can go. I'm never going to be at risk of liquidation, or, really the way to think about it is over levering your life. If you're ever in a point where you need Bitcoin to be at a certain price or else your life is over, that's bad because you never know. So I would only recommend, people borrow some, 5, 10, 15, 20, 25% of their stack where, if things go against them, they can, provide more collateral, no problem. But if you can do that, I would recommend the payment at maturity option. So you're not, having to make monthly interest payments. You're letting Bitcoin just grow over time. And then you're able to, call it refinance the loan. So, take proceeds of a new loan, pay off the old one, and keep going. That's what I do. I will. Right now, I'm working on my keynote for Bitcoin Prague conference. I speak on Thursday. I'm really excited about it, but these things are intense and hard to put together. So when I have some time, I will put together a video of how I use Strike, now inclusive of the lending product. I will make sure I do that. Okay, last question, which is a personal one. Have you ever found yourself feeling BTC burnout? Like, I've obsessed too much and almost feel like I need to step back. I'm not going to say yes to that, but, balance in life is important. My girlfriend just moved in, and that's been the best, having a partner that, and it's cool because, she's a Bitcoiner because she dates me, but she's not nearly as obsessed, right? And so I've actually really enjoyed that she's a really good cook, and we share dinner and don't necessarily have to talk about Bitcoin and what China said and what Trump's trying to do. So I think all that to say balance is important, for sure. I found that in my life, absolutely. I've always been an athlete. I'm really excited about one day having a family. So I would recommend balance, but no, I don't think I've ever been burnt out. It does feel like my life purpose to me. But I hear where you're coming from, man. I do. And I think I would just recommend a little bit of balance. And by the way, balance to me is like getting outside. I don't know if you guys can see, I got a little tan going. You see these cheeks? So I love laying in the sun. Even if I'm listening to Bitcoin podcasts, going for a walk in the park, exercising, eating high quality food, really enjoying the travel that I do. I mean, all of this has helped contribute to me, just enjoying the journey, because it is a grind. There's no doubt it's a grind. And there's a lot of sacrifice implied in being a Bitcoiner. People think you're an idiot. People think you're wrong. There's a lot of volatility you got to go through. So balance and really, invest. Here's what I'll end it with. Invest in yourself. Something I've learned. I invest a lot in myself. And I'm not talking just monetarily, but I make sure I always have time to lay in the sun and gather my thoughts, always have time to go to the gym or go for a run. I invest in high quality food. I consume only raw dairy. I consume high quality meat. My diet isn't, I wouldn't say it's strict. I'm not trying to be a bodybuilder, but I'm not trying to accrue like metabolic disease or feel like shit or, like have stomach issues. So I do invest a good amount in allowing myself to kind of enjoy the journeys. So that's been huge for me. And it's an investment just like Bitcoin. You have to make conscious investments, and everything's correlated to the proof of work. Cool. All right, guys. With that, we're 15 minutes over the top of the hour. I'm going to call it. What a joy this show is. What a fun, how good does it feel to be in this little weird corner of the internet that is the Jack Mallers Show? And we've just been right. We've just been right. So pretty cool to see Bloomberg just basically write a summary of the last few weeks of the show. So long Bitcoin, short fiat, stay humble, stack sats, do the proof of work, take care of yourselves. We are the future. My talk in Prague, I hope you guys can check it out. Maybe I'll post it on my channel here. It's a millennial manifesto. It's a letter from the youth. It's really about how the decisions made over the last 100 years have really burdened my generation, and the cost that we've had to pay and the future that we want through, open source software. And, Bitcoin is computer code, but more importantly, it's ethics. It's an ethical code of, thou shalt not steal, thou shalt not counterfeit money. Everyone should be treated fairly. So it's just cool that we've been on the right side of history so far, and I get to share it with you guys. So with that, I'll see you all in the comments. I read all of them. Give me the feedback. You can make fun of me if you want. It doesn't hurt my feelings anymore. I'm past that. And I use you guys to make the show better. So if you want the show better, if you want me to do anything different, just let me know. Love you guys. See you next week. Peace and love. Take care.